Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I have covered in previous videos, and I will do a quick review on each of them. Also, I will cease coverage on these names because their chart patterns have been invalidated or did not perform up to expectation. I have put in timestamps, so please use them to skip to the names that interest you. I highlighted on the 13th of December last year that there should be a bit more downside in Medtronic as it corrects its upper Bollinger overextension, after which upside is expected to resume. Downside did prevail but bounced off the 20-week simple moving average and has since rebounded. Now that it is back above the $100 mark, I expect it to extend its upside. I'm still bullish on Medtronic due to completion of a head and shoulders bottom. Textbook target is at 115.51. In the last video on the 28th of December last year, I used a daily chart to review Hermes International, but going forward I'll be using a weekly chart so that it is less messy. Now from the chart you can see that upside bias is actually lacking after having closed above the 20-week simple moving average but failed to hold above it, especially this week. Now that Hermes International is back below the neckline, I suspect the downside resumption phase will begin. The textbook target of this cup and handle top is at 1,239.5. Of course, there are two supports, 1,639 as well as 1,895 that can bounce Hermes higher if tested. I last updated on Salesforce a while ago, 22nd of November 2025, and turned technically bearish due to the completion of a head and shoulders top over here that has a textbook target at 93.11. Since then, Salesforce rebounded but failed to hold above the 20-week simple moving average, a trend that has been observed since May last year over here. I will stay bearish on Salesforce and continue to target 93.11. There are two supports, 159.37 as well as 194.08 that can bounce Salesforce higher if tested. I have to turn technically bearish on Broadcom because it completed a head and shoulders top on the 23rd of January, closing below the neckline. The textbook target is at 232.86. Note that there is a support at 282.13 that can bounce Broadcom higher when tested. If Broadcom rises above 360.66, then this bearish pattern will be invalid. In the video on the 17th of January, I highlighted a potential double bottom forming on the daily chart of Sing Ringgit. This bullish pattern was eliminated in the following week. So this is no longer valid. I will revert to a bearish pattern in Sing Ringgit on the weekly chart, which is a head and shoulders top. Now, given the recent breakdown, after breaking below 315.60, Sing Ringgit quickly reached 313.05, the next support, and broke below it this week. After breaking below 313.05, the next target that Sing Ringgit should be targeting is 306.81, and if this support fails to bounce Sing Ringgit higher, the next target will be 299.07. EURCHF also completed a head and shoulders top that was on the 21st of January. The textbook target is at 194.67. Now, despite the sharp decline over the last 2 weeks, EURCHF could still go through the correction phase, during which price action would rebound first to around the neckline at 2.0074 before resuming the downside thereafter. In the video on the 28th of December, I turned technically bullish on dollar real due to completion of a double bottom. This was an incorrect decision because this bullish pattern was eventually invalidated over here. I will now revert to a technically bearish outlook on dollar real based on the weekly chart, which is a head and shoulders top that has a textbook target at 4.9543. On 12th of January, I proposed the potential formation of a head and shoulders bottom on the US 10-year government bond yield. The 10-year yield completed this bullish pattern on the 16th of January, advanced and went into the correction phase and filling the gap up in the process before rebounding thereafter. I believe the 10-year yield is in the bullish resumption phase. The textbook target of this head and shoulders bottom is at 4.4630. I will be ceasing coverage on 3 crosses, starting off with the dollar index. I proposed the formation of a head and shoulders bottom, but this bullish pattern was invalidated on the 23rd of January after price action tumbled. I will cease coverage on Euro Swiss. I turned technically bullish on Euro Swiss over here due to the completion of a descending triangle in a bullish direction, but this pattern was invalidated after closing below 0.9222. Finally, I will cease coverage on dollar NOK. I turned technically bullish due to a falling wedge as well as a cup and handle bottom, but both bullish patterns have been invalidated due to last week's tumble. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.